So basically what we are saying is, if you have been listening, if you have been paying attention, like you realize that first thing first, if ever you're analyzing, like especially here on TradingView.binary, what you do, even on your MT5, you simply need to clear out your chart first like this, because most of the times you can, if ever you did your analysis wrongly yesterday, it means basically today you're going to follow that same wrong analysis. So meaning you're going to maybe repeat the same mistakes that you might have made even yesterday. So that's why clearing your chart is very, very wise, because it gives you a chance to correct any errors that might have been there the previous day. So what we do first is to identify our major areas of significance. So basically, I only need few lines here. I only need few lines as my major areas of significance on the daily, because these areas on the daily are the ones that determine every action that we take on the smaller time frame. So basically, I need these areas basically. So I'm going to put my areas of significance on the daily. I'm mostly interested in the areas of significance that are connected to where price is currently, because price is here right now. So basically, I need the areas of significance that are close maybe to where price is currently. So here I'm trying to look for this area here, respected, 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 and respected there. This area is okay, that one. Then at the top, we can also try maybe to get another area. You can also try to get another area of significance, right? This is an area of significance, respected, 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 all the way, respected again. So basically that one as well. Here, the top, that one is also can be an area of significance. Then here, the bottom, this can be an area of significance, or respected there, respected here, respected there. So basically, we can leave it like that. So I have these 4 areas of significance. They are okay like this. I don't need 1,000 lines here to make a decision right now to know what end to trade right now. So basically, the first thing that you now need to identify is the trend. Number one, the direction, the overall direction of this particular instrument. So basically, to identify overall direction, you can either use trend lines, or you can use your support or resistance, or you can even get that that direction even from the moving average. You can even get that direction from market structure. So if you check market structure here, higher high, higher low, higher high, higher low, higher high, higher low, higher low again there, then there, that's a higher high. So now from there, now that's where price began to fall. So basically, if you check from here to that area, price was uptrending, 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 up until it began forming that lower low, lower high, lower low. Then we're just coming from a lower high, which is where we first initially entered ourselves, if you still remember, lower high there. So now from the lower high, we expect the price to go and break this low and make a lower low. If ever we're still continuing with this downtrend, we expect price to come and break this low like this. Then we continue all the way like that. So that would be a continuation of this downtrend that we have seen that has just begun here. That would just be a continuation of the downtrend. So basically, this area here, this low here, is also a key area that one can actually mark out on their chart. It's also a key area that one can actually mark out on their chart, because the break of that low, of that lower low, can actually resemble some opportunities as well, some selling opportunities, even the retest, some also selling opportunities there. So this is a key area. My key areas, I mark them in yellow like that. It would be a yellow area like that. That is a very, very key area. So once I've done that on the daily time frame, I have seen over the market structure has already shifted And you can also even place a trend line. You can also confirm the same thing, that already we're now in a downtrend. This was an uptrend, uptrend, uptrend. Below this trend line is a downtrend. So someone can put that trend line, someone can decide not to put that trend line. So me not putting it doesn't mean that I'm not aware that we're in a downtrend. I'm very much aware that we're in a downtrend. The only trend line that I can put for now that is relevant to me now is this trend line here, because this one can give me some opportunities to the downside. It can also come and be touched, then give us some selling opportunities to the downside. So that trend line is very, very, very important to me as of now, because market can come, they can touch here, give a third touch, first touch, second touch, most probably a third touch, then continue going down, because we're now in a what? In a downtrend. This is a downtrend for the higher time frame, and the higher time frames are the direction that you can get on a higher time frame is it can last for so many days, if not weeks, if not months, because they affect what happens on the smaller time frames. So someone can come and place it like this. It's also okay, because price can come, maybe break, then continue going like that. Someone can place it like that. It's also still fine. So on the daily, we've seen the direction, we've seen the overall direction that we are bearish, market is bearish, and we are downtrending. We are in a downtrend. So in a downtrend, we expect to actually identify all the major selling opportunities so that we don't miss any of them. So that is our trend line there, the top for the downtrend. Then we also need a trend line at the bottom. A trend line at the bottom, one can put this one. One can put this one. It's also fine, because it can come. It's also fine like that. Or someone can decide to not put this one, but actually put this one, because this one is this area here, this low here is connected to the high where this trend line, the top trend line originated. The top trend line originated on this high. So you just track down the top trend line and you discover that the low that produced that high is this area. That's where you can place your what? Your bottom trend line like that. So that one is more, it's more accurate than that other one. It's more relevant, in fact, than this one, which crosses like this, because that one is also somewhere close to this area here of support there. So I have this downtrending structure. As you can see, we're downtrending. So in a downtrend, it doesn't mean that we're never going to have buys. Buys are going to be there. Buys are going to be there, but we know that the major moves are going to be on the sell side. So basically, we hold the sells longer. And so this area here, this zone here as well, it's also a zone that was broken. If you check this area here, price came, respected. So basically, this was a very, very significant area, level of support here. Price was supporting up until it broke. So this breakout here, we never got any retest to that area there, which is kind of the retest that we are most probably expecting price to come back, because this is a major area. It's on the 4 hour. It's also a major area. It's a very, very significant area. Very, very significant area. So once that area is retested, it's simply giving us more opportunities to continue selling, since we are already in a downtrend. So whenever we are in a downtrend, once you have identified the structure like that, what you need to know is to know the waves. Like, for example, whenever you're swing trading, this is a wave. Like this move from here to there, it's a wave. This move from the bottom to the upside, it's a wave. This move from the upside, most probably want this market to come down to the downside. It's also a wave. So from the bottom side to it's also a wave. So as a swing trader, you need, what you do as a swing trader, someone who enters at the beginning of the wave, comes out at the end of the wave, enters at the beginning of the wave, comes out at the end, beginning, end. So basically, as swing traders right now, basically we are still holding these sells for the VIX. This was simply a retest to a major area. These sells that we took, they were simply a retest from a major area that was broken on the daily. So basically, it's simply a retest to a higher time frame area that was broken. So the sales, they began here. This was also another wave. Then this buy was simply retesting this broken area came back to retest, gave us other selling opportunities. So basically now we are in this wave now. This wave we expect it to start there and end there, but basically it won't go in a straight line. Sometimes it comes with the retracements and all of that. So basically retracements are simply opportunities for those that never entered there to also climb and join that that move. So another area that you also need to take note of are these areas of support and resistance on a 4-hour perspective, because they are very, very key, these areas of support and resistance, because they also help you even with entries as well, because we actually need to get entries today, not tomorrow or next week. So this is also a significant area. Price came, respected, broke that area. So basically now is back to that area again. Price is back to that area, but basically we've seen that obviously market structures already begin to shift to be in a downtrend way. So here as well, we can also have another trend line as well on the 4-hour perspective. You can also have this trend line here, because price can come and actually respect that trend line before even going to this other major trend line there. So this trend line as well is also significant, very significant trend line. Price can come, respect this one, and continue going all the way to the downside. So that area there is a key area right now, because it's a level of support right now. Price is respecting there. Price can actually shoot all the way up basing on that support there. So as you remember that our first target, if you remember, our first target for this downward move was the 0%. Our first target for holding the sales is the 0%. And if you check the 0%, it's here at the bottom here. Right, that's where our 0% is. Our 0% is there at the bottom there. That is the first target according to Fibonacci. That is the first target. So if you check, even if someone was just using Fibonacci, just tracing this downward move that was happening here, from there, that point A there to point B when the market began to reverse, even if you missed maybe the sales that were happening here, you could have gotten even the retracement here, the 61.8. At the 61.8, one could have even gotten the earlier area sales. You could have gotten them on the 61.8 there. You could have gotten them there as well. So basically, I'm saying our first target is here on the 0%. As you know, second target is always the -27. Third target, -61.8. Then finally, if ever the market really swings all the way, the final target would be the -100%. But the -100% is usually reached after a very long time. These ones, 0%, -27, most probably they are reached first before price retraces and goes all the way to -61 and most probably -100. So 0% will be our first TP for this VIX75 downtrend. So here it can come, then boom, then go all the way. So then come and break there, then maybe do this, then come all the way to the 0%. Then on the 0% there, that's where we now need to look now closely at what price will do. Because beyond the 0%, what can happen is price can actually even go back up now before even continuing with the overall. Can actually go up, give a third touch on the top trend line, then boom, then continue going all the way to the downside. So that can actually happen on the 0%. Can actually happen on the 0%. That's why the 0% is our first TP for these sales that we are planning to take. So I now need to go to a lower time frame than the 4-hour, which is the 1 hour, because 1 hour, 30 minutes, 15 minutes, one can actually get entries there. One can actually get entries there for the meantime. As a day trader, you can actually get some very good entries there. 1 hour, 30 minutes, or 15 minutes, you can enter on those time frames. So this is the 1 hour. So this trend line is a very key trend line, as you have seen. Then here also have this area of significance here. This is a resistance here. Price has been restricting to go higher there. So meaning that resistance is also key for someone who's going to take their buy entries, because the break of that resistance can also resemble some beautiful buying opportunities to the first target, which would be the trend line there. So this Fibonacci, blue Fibonacci, I can just hide it since I already know it's a major Fibonacci that I'm looking at that can help me to hold trades longer. So I also have this other Fibonacci here using my lower time frame, which is my 1 hour, which can help me with entries. This is a 1 hour Fibonacci, because price here can actually come and respect maybe the 50%. I just took this area, point A, point B. So the retracement, I'm just trying to look where the retracement can happen. This is an impulse move, impulse, retracement. Impulse, this was an impulse move. If you put a Fibonacci here, you actually realize that you could have even gotten the entry there based on a Fibonacci retracement. So impulse retracement, price retraced on the 50%. You would have gotten this sell, came back again, gotten those sales again, using your Fibonacci. So same thing here, impulse started here. We simply want to see how far the retracement can go. Is it going to come to the 50%? If it comes there, we simply strike and continue with our sell all the way to the 0%, which is our first target. So now we are looking now at 1 hour. We have seen that we have a level of resistance as well that can actually have an impact on our entry. So that area as well can actually help one to actually enter their buys. Once that one is broken, one can actually enter their buys all the way to the 50%, which might be the retracement for that area. So here on the 50%, it's actually something like $40 with a minimum lot size. That's $40 with a minimum lot size, meaning with the 0.005, that's $200, the 0.002, that's 80. So depending on your account size, you simply need to know the risk as to reward that you'll be having. For example, here the risk as to reward is 1:5. For example, we're not sure where but the best entries that you can ever take is on the 15, because it gives you a smaller risk. It gives you a smaller risk for your trades. Give me a smaller risk for your trades, the 15-minute. That's why it's our first preferable entry time frame when it comes to the volatility 75. So if you check here, it actually tried to fake out. This was a fake out, faked out, came back inside. So basically here one could not have entered because we didn't get any retest here. Plus the breakout. Okay, let's say even if someone entered, the breakout candle had rejections. If you check these rejections, they are not really the breakouts that we want. A breakout candle, you always want it to be something like a full candle whereby something is just to be big, as you all know, big, and also a full candle, something like that, something like this. It better have a wick here at the bottom like this, not to have a wick at the top. That is a sign of rejection. So it's better to have a wick like this at the bottom. It's okay that way, or even a full candle. That are the possible breakout candles that we look out for whenever we are planning to enter. So that is what we are now anticipating to happen currently right now. So someone can even come, maybe because they want earlier entries, they can even come and place a trend line here, a mini trend line here. They can touch there and touch here. This can also be a trend line that can help them with this particular entry that we are planning to take here. That can also be someone else's trend line. So there are so many ways to enter these trades, guys. So many ways to enter these trades. So the break of this can also be the break of this. Break, retest, then boom, we go all the way. So that is our current view on volatility 75 for today. That is the current view today. I think we'll do another Zoom meeting later at the end of the day so that we see how price responded to our overall analysis. So basically, the first scenario that we're expecting is simply a retracement, then a continuation. So if that does not happen, price can even continue going all the way down, whereby it comes here, fails to break that area that we're expecting it to break. It can happen, fails to break that area, but actually comes down and breaks the downside retest. That continues. It's actually possible, continues all the way to the 0%. It's actually possible as well. So meaning here, we simply enter on the break and the retest here. That's where we enter sales. That is if it does this move here. Breaks and retest to the downside, will sell and hold all the way to the 0%. So But here we simply expect a retracement. That is our first scenario that we're currently expecting. A break there in the retracement, then we continue. So those are the scenarios that we are looking at for the volatility 75. So whatever happens, we are simply ready for whatever happens. We are simply ready for whatever happens. So I hope everything is clear to everyone, and I hope no entries are going to be missed. Are we together?
Yes, it's all clear.
Okay,
Thank
so
you.
So I hope so 15 minutes is mostly your favorable entry time frame. Even 30 minutes you can enter using 30 minutes. 15, 30. If you are that late, you can even consider maybe 1 hour, but 1 hour will give you a bigger stop loss. It's not really a wiser time frame to enter, but it gives you a very bigger stop loss. So I think we also need another Zoom just for crash 300 so that we clarify some things there. So that people, when they now miss now, they miss, but we know that they are missing is not because of us, it's because of them. You understand? So on our side, we also need to set the record straight there and make sure we record this video so that when you miss, we know where to point to. Say, mind you, you missed, but we had spoken about this. Let's go back to the video. The video, we spoke about this. We spoke about all the scenarios that we're expecting. We spoke about the entry. We spoke about the exit points. We spoke about almost everything. But you just chose to miss. So whenever a person does that now, we now want to see where their main problem is now. Because definitely your problem is not us there. You can't say we are your problem because we are actually not part of your problems when it comes to those scenarios like that. We are not a part of your problems here. So I hope the VIX75 is clear. I hope it's clear.
Yeah.
So do you have time so that we just cover the C300? C300. Well, C300 is also an interesting instrument, that one.
I'm free.
There's good money there on C300.
Look at you. You've tasted the
No,
goodness
no,
of very volatile pay. Now you've been recruited. Huh? This is good.
You guys, no, it's interesting. Like, it's interesting. Like, I'm seeing a very, very beautiful long-term serious sell that can happen with crash 300. That's why I'm really putting most of the focus there. I'm seeing a very, very long-term sell that can happen. So we'll talk about that. Let's have the meeting and see. Let me show you what I'm seeing on that crash 300, so that even if we miss, people they miss based on their own choice. You miss. So here you miss by choice. Here. If you miss a trade, you miss by choice. It's a choice to miss. You're not missing because you don't know, but you're actually missing because you have chosen to.
Okay.